your stories,
your freedom.
The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com on this Friday. The week has gone by very, very quickly, and this is Open Line Friday. No guests, just phone calls for the next 2 hours at 855-4-SCHIFF, 855-4-SCHIFF is the number to call. So start queued up now. We got a couple of calls in, but still open phone lines for those of you who want to get in on the action today. Meanwhile, relatively quiet day on the economic front, although we did get leading economic indicators that just came out for the month of October, actually up 0.9, which basically means 9 out of 10 of the indicators that are considered leading indicators, as opposed to a coincidental indicator or a lagging indicator. The leading indicators are supposed to be a sign that the economy is picking up. I don't put a lot of stock in these. A lot of it is just, confidence-related spending, consumer spending up, stock prices up, building permits up. I mean, it could mean a lot of it is the sign of optimism, but what if it's a false sign? What if we're spending borrowed money? What if it's all being pumped up by inflation? And what if the people who are acting on these impulses are acting incorrectly? So I don't really put a lot of stock in this leading economic indicator series. But anyway, it gets out, it gets some headlines, and it was a positive one today, being up 0.9. And I think that's because 9 out of 10 of the indicators were positive. Last month, the indicators were only 0.1, meaning they were pretty much all negative. This time, it was the opposite, at least for the month of October. We'll see if anything turns around by the time we get the indicators for November. One of the big discussions that's going on right now, certainly among the financial or economic pundits out there, is whether Europe is doing the right thing by not following the Fed's example or doing the wrong thing. It seems that the political drums are beating all around the world for the ECB to do what the Fed did and just print money and buy up a bunch of bonds and put an end to the euro crisis. See, I think that would actually make a worse euro crisis in the long run if they were to do that. You see, everybody who is arguing that assumes that we did the right thing. We didn't. We did the wrong thing. And we are going to pay an enormous price for the mistakes that the Federal Reserve made. I think that the ECB, Germany, is trying to prevent Europe from making those same mistakes. In fact, if you look at a quote yesterday from this is the economic spokesman for the Christian Democratic Union Party in Germany, which is, of course, Merkel's party that she's a member. Listen to what he said, quote, "Printing money at the end of the day means inflation. Every German is very much scared about inflation." Well, he's correct. Although it's not just at the end of the day that it means inflation. It's at the beginning of the day and every minute in between. That's all it means is inflation. And Germany is not willing to trade a fiscal crisis for a monetary one, for inflation. What the ECB wants is for member states, member nations, to cut government spending and not rely on the printing press of the ECB to do all the heavy lifting. See, that's what we're doing in the U.S. We're not making any of these cuts because the Federal Reserve is doing exactly what so many people want the ECB to do. And we are going to pay a very, very substantial price for the mistakes that have been made by the Fed. I think especially once the Eurozone crisis comes to a conclusion one way or another, our chickens are coming home to roost, and then it'll be apparent which nation did the right thing and which did the worst, or did the wrong thing. Talking about doing the wrong thing, we have got this super committee deadline coming up next week on Wednesday, where the House has to agree, or Congress in general has to agree on spending cuts. I think it's about $1.2 trillion in cuts. Of course, that's not. It's over 10 years, so you're talking about peanuts here. You're talking about a spit in the ocean when it comes to the actual debt. But these clowns can't even agree on these cuts. And, of course, if they don't agree on it, then there's going to be automatic spending cuts that are going to kick in. Now, remember, this is what they agreed to back on that budget deal to raise the debt ceiling. They said, we don't know what the cuts are. We're going to give Congress a certain amount of time to come up with some cuts. And then if they don't come up with them, then there's going to be automatic cuts. Well, of course, they had all these months to come up with them. And here it is, again, the ninth hour. Congress is like, the kids in school that have weeks and weeks to do their midterm report or their essay, and they wait till the night before. You'd figure that these are adults that have been in Congress for a long time. You'd think they wouldn't behave like junior high school kids that are doing all-nighters trying to cram in their term paper at the last minute. I mean, in fact, I remember working on mine, in the morning, getting no sleep. You'd show up and you'd turn the thing in. But you'd think that they would have learned their lesson by now. After all, they're not a bunch of teenagers, although they act like them. But what I think is ultimately going to happen is I don't think we're going to get any real cuts. And, in fact, I don't even think we're going to get the automatic spending cuts. What I think these clowns are going to do is they are going to find a way to vote to prevent the automatic spending cuts from kicking in. And, of course, what's going to be the excuse? They're going to say, well, the economy is too weak. We can't endanger the recession. Unemployment is still at 9%. We can't cut. It's too draconian. It's going to hurt the economy. It's going to hurt jobs, blah, 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 blah. One excuse after another. And they will not allow these cuts to actually take place, which, of course, was probably their plan all along. The whole idea of this super committee was all nonsense. It's political gamesmanship. Whenever Congress sets up a committee to do something, they know full well going in that it doesn't matter what the committee does, they're not going to do anything. It's just a means of pretending to do something, but not actually doing anything. So if they instead of cutting the budget, what they do is they say, okay, let's create a committee, and the committee is going to figure out what to cut. That way they don't have to cut anything. They can say, look, we voted for the committee to come up with some cuts, and so they can postpone actually having to make any cuts. And then they know as soon as the committee comes out with the recommendations, we can't do that. Oh, no. And then that's it. And it's all about pretend. It's all about making believe they're actually doing something. Meanwhile, we have to waste money. The taxpayers have to spend money to run these committees. A lot of times they bring in outside people, they pay them. It's a complete giant waste of money for political theater just so our leaders can avoid actually doing anything, yet still get reelected by pretending that they're doing something. We ought to get rid of this whole concept of committees to study things. It's all a joke anyway. If you want to make cuts, cut. If you're gonna talk about cutting the deficit, don't just set up a committee. Do it. Accept responsibility. Anyway, we will be back. We got a bunch of calls on hold. We're coming back. Stick around. You're listening to the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff here at SchiffRadio.com. This Friday, we are taking calls live for the next, about an hour and 40 minutes at 855-4-SCHIFF, 855-4-SCHIFF. The first caller of the day is Tom, calling from Kansas City, Missouri. Tom, welcome to the Peter Schiff Show.
Hi, Peter. Thank you for taking my call. First, I want to thank you for the amazing job you're doing educating people around the world. I've been on board with you for about 5 or 6 years. Anyway, a friend of mine recently sold his house in May, I think. It was paid for, and he's now building a new home on a farm that he owns outside of town. He is going to go over the cost of the sale price from his old house by about $100,000, and he's wondering if he should take the money out of his pocket, which he can afford to do, or get a loan. And he has grade A credit rating.
Yeah, well, I took out a loan. I mean, that's, I've got a loan on my house. So, a lot of it depends if you've got, a source of income or, because you have to make the payments, or obviously if he has the cash, you can invest it as long as you understand the risks involved. I still think there's a lot of stocks around the world that you can buy, and especially if you diversify and buy a basket of them, where you can get income, dividend income, that will exceed the mortgage rate. I mean, on a small loan like $100,000, you could get a rate of 4%, and you could lock that in for 30 years. That's a pretty low hurdle to have to overcome on an investment. I mean, if you could buy investments yielding 6%, for example, in dividend yield, you're getting a return of 50% above the cost of the borrowed funds. So you've got a lot of wiggle room in there in case some of your stocks have some trouble and have to reduce the earnings, you reduce the dividend somewhat. But if ultimately we get a lot of inflation, you end up owning those stocks for nothing, which is what I think is going to happen. So as long as your friend understands the risks involved, that's what I would do. But again, he's got to specifically, look at his own situation, whether or not he would just want to pay cash or do something better with the money. I think at least, he's got some farmland. So if his house is on farmland, maybe to the extent that, he could farm it, there might be some value there. I know farmland in the U.S. has really gone up in value recently as an inflation hedge and as a result of the fact that interest rates are so low.
Well, what do you think of this? My argument to him is that, we're almost certainly going to see higher interest rates in the future, possibly the near future, and he'll be paying that, and inflation as well, and he'll be paying back with cheaper and cheaper dollars.
Well, that's the whole idea, and especially like if you use the money to buy income-producing assets abroad, and let's say you're getting a 6% return, and that means that, and you're paying 4% for the money. So on a $100,000 loan, that gives you positive cash flow of $2,000 a year based on the differential between borrowing at 4% and loaning out at 6%. You're making 2% of that $100,000. But if the dollar were to lose half its value, let's say, all else being equal, well, then your 6% yield is a 12% yield. So now 12 minus 4 is 8. Now you're making $8,000 a year in positive cash flow. After, what would that take? About 10 years, 11 years, maybe, I don't know what the compounding, but after a certain number of years, you would have earned enough cash flow to have retired the entire debt. And then that $100,000 portfolio that you acquired, which would, of course, now be worth $200,000 if all else being equal and the dollar lost half its value, you would now own that portfolio for free. You would have a portfolio that you wouldn't have otherwise had, and you'll still have your real estate fully paid off. So there's a lot to be made if the dollar does go down a lot and there is a lot of inflation and you've put that trade on. The risk is that the dollar doesn't go down, that the dollar goes up, and the foreign stocks that you bought are now worth less, and so you might have been better off just buying the house. Of course, you're still getting the dividend yield, assuming the companies remain in business. So, but there's always risks, but people have to decide. But with what I've done personally, and of course my situation could be different, but I took a big mortgage on my property, even though I had all the cash to not need it.
His situation is very similar to yours, and also part of what he would be pulling out of his pocket are some gold coins that he holds, so he would be selling.
I wouldn't want to get rid of my gold, although gold certainly has appreciated quite a bit, so, right. I don't know what he bought it. Yeah.
Well, thank you so much.
All right, well, thank you for the call, but whatever, make sure your friend, if he's got some extra cash, make sure he calls up Euro Pacific Capital so he can become a client. All right, thank you. Next up is Joe calling from Montreal, Canada. Joe, welcome to the show.
Yeah, hi, good morning, Peter. I just want to continue on the conversation you had with the last guy before my question. I'm in Montreal. You guys are situated in Montreal, right? And
we have an office there, correct?
Yeah, and I'm going to be coming into some cash that I could borrow and lock it in for a couple of points a year. And how safe are these investments? Like, what about corporate bonds or in Canada? Is there anything that could give me a bigger return than 2%? That if I could borrow it at 2%, money 2.5%, something like that? Is there anything that?
Well, I mean, there are a lot of things that are going to give you better than 2%. There are a lot of stocks that we buy up in Canada that yield well over 2%. So there is a lot of income opportunity up there. But of course, the stocks that are generating those yields are susceptible to fluctuations in price, and they can fluctuate down. So.
What about corporate?
But if you got a long-term time horizon, I think there's great potential there.
What about corporate bonds, like a safe that won't go bankrupt? If you keep them for a few years, I'm not sure, Mike, at the time how much.
Yeah, well, if you get a strong corporation with a good balance sheet, corporate bonds, you can look at how their ratings, but in general, they're pretty solid. The only thing you really have to worry about with most of these companies, if they're solid companies that have been around for a long time, it's not really that they're going to go bankrupt. What really you have to worry about is what happens to interest rates in the future that might diminish the value of your bond should you need to sell it, or how much inflation there's going to be. And how much it might erode away the value of your principal. But there are a lot of things you can do. There are a lot of convertible bonds that you could buy that give you kind of the best of both worlds, where you get, that more reliable income source, and you have more safety. Yet if there is a lot of inflation, you can join the equity shareholders by converting and taking an equity position out of your debt position.
And so your people here, your representatives, they're well educated on this. They're just as much as you are, right?
Oh yeah, just call up the guys or stop by the Montreal office at Europac Canada. I mean, they will be able to talk to you more specifically than I can on this radio show about all the various options. But there are a lot of good high yielding opportunities in Canada as well as in other parts of the world. But you've got a lot of good opportunities right in your own backyard. Anyway, thank you for calling. Next up is Kevin, who's here in New York. Kevin, welcome to the show.
Hey, Peter, as always, thanks for taking my call. A couple of questions, actually. One is on housing. I'm reading Michael Lewis's new book, Boomerang, and I guess I didn't really realize how many other countries had housing booms, and I'm wondering why was it going on all around the world? I know in the U.S. we had easy monetary policy, and so all the money I guess turned into a housing boom. But even if other central banks I guess were as easy with credit as well, why did it go into housing all around the world?
Yeah, well, that's a good question, and I've got a good answer. It's going to have to wait till the other side of this break. We got a commercial, so stick around. We will be right back. We'll answer that question as well as taking more phone calls. 855-4-SCHIFF is the number to call. We will be right back.
It's the last time you're gonna hurt me.
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio. The Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. 855-4-SCHIFF is the number to call on this open line Friday. Meanwhile, before the break, we were talking to Kevin in New York about the global synchronized housing boom. And was it a pure coincidence that we just happened to have, exuberant housing markets all around the world? Not at all. You have to remember that one of the most important components in determining home prices is interest rates, because most people who buy houses finance their purchase. And so the lower the rate of interest is, the more people can afford to pay to buy a house. And what happened is when we lowered our interest rates in America, we have the reserve currency. And so we exported our bad monetary policy all around the world. So by bringing down interest rates on the dollar, the reserve currency, that helped pull interest rates down all over the world. So it wasn't just the United States that had artificially low interest rates. It was all the countries around the globe that were trying to keep their currencies from being too strong relative to the dollar. They were also able to lower their interest rates without hurting their own currencies. So that's what happened. And also you had the situation in Europe where many countries in the Eurozone, such as Italy, Ireland, Portugal, Greece, now that they were in the Euro and they no longer had the drachma or the lira or the peseta, interest rates really came down in those countries even more so than simply what would have happened from the U.S. Federal Reserve, because now all of a sudden lenders were no longer as worried about inflation because they no longer had the ability to just run liras or drachmas off a printing press. So interest rates came down to low levels all around the world, and that's what helped push up home prices everywhere. And, of course, as home prices start to rise, even in some parts of the country, in the world rather, investors look at real estate going up, let's say in the United States, and they say, oh, look at what a house is worth in the United States. Here's houses in other countries. Oh, they're undervalued. They haven't gone up as much. So it's kind of like a contagious situation where the strength in real estate in one part of the world will lead speculators to buy in other parts of the world, looking for some kind of relative value convergence where, it's a kind of a global thing. And then even the speculative mania becomes kind of infectious as rising real estate prices, ratify the idea that real estate prices will rise, and so they continue to rise. But I think the main reason that you didn't have as many problems in some of these other countries that had overheated real estate markets is you didn't have the Fannie and Freddie aspect. You didn't have governments guaranteeing the mortgages. You didn't have ultra-low down payments. You didn't have the proliferation of subprime, interest-only, negative AM, zero down. I mean, we took it to a whole nother level in this country, and we put all the risks on the lenders. Whereas in a lot of other countries, the people who were losing money in the real estate markets were the people who were buying the real estate. In America, the losses were on the banks and the lenders that were financing all the speculation. That's what made it so much worse.
But does that mean that, like, every time interest rates have gone low, extremely low in history, that it creates a housing bubble? I mean, is it like the most likely thing when interest rates go low?
Well, not necessarily. I mean, it is one likely aspect. And, we had just had a stock market bubble, so it's difficult to blow two bubbles simultaneously in the same asset. So since we had a stock market bubble in the 1990s, especially, in internet and tech, real estate was the easiest place for that cheap money to go. And especially with government guarantees. And remember, you had the government really pressing the banks to lend to people that traditionally they wouldn't have loaned to because it was too high risk. You had the FHA giving away real estate. A lot of people were buying homes with basically nothing down, even though it was 3.5%. It was 3.5% of somebody else's money. So with all the government pressures, and plus remember, the government in the United States told people, hey, if you make $500,000 in real estate, there's no tax. I mean, real estate was really one of the only ways to gamble tax-free. So obviously a lot more people did so. Now, that might not help explain why people in Australia might have been gambling. But the fact that our real estate market was so strong and going up so much, that kind of lights that speculative fever because people start to see real estate going up here and they say, well, where's the next place that's going to go up? Well, it'll go up over here. And even a lot of that was Americans. A lot of Americans who were making money on real estate here started taking out loans on their U.S. real estate and buying real estate abroad. There are a lot of Americans that were buying condos or vacation homes in Mexico. Because they were taking out mortgages on their U.S. properties, and they were going buying, thinking, hey, Mexico is next. Our markets have really appreciated here in California. Mexico hasn't gone up as much. Let's go buy down there. And so a lot of our money ended up in, getting into real estate in other parts of the world. We were, a lot of people were taking money out of the New York and Florida real estate markets and buying places in the Caribbean and some of the islands. I mean, so the whole thing spreads. All that cheap money just goes into real estate all around, and when the bubble bursts, it affects everybody.
Gotcha. That's great. And one other thing, actually, related to a question earlier. In Crash Proof, you were mentioning like it's not a great idea to short the stock market because the value of the dollar could could lose value faster than your gains, from shorting the market. But I know you've mentioned on the show that you're short treasuries, and I'm just wondering, like, how why
Well,
you
shorting treasuries is very different than shorting stocks, because if there's massive inflation, then shorting treasuries is going to be a good position to have on. If there's massive inflation, being short stocks is not necessarily a good place to be. Stocks could rise. In fact, if we have a lot of inflation, I think stocks will rise in a nominal sense. I don't think they're going to rise in a real sense, but when you're shorting stocks, the bet is that they fall nominally. And if they rise nominally, you're going to lose on that short position. Now, there's people that are professional traders, fund managers that have better deals with their custodians, they can short one stock and buy another stock with the money. That's a totally different scenario. But the average American, if you're going to short stock at a brokerage account, your broker is going to force you to take all the sales proceeds that you got from shorting that stock and keep it in dollars and cash, and then they're going to require you to put up additional money in dollars as margin requirement. And I think that is not where you want to be if we have a lot of inflation. Now, if you could short all those stocks and take all the money you got, let's say you could short a stock and the money you got from shorting the stock, you could put it in gold bullion. Right? That would, in my opinion, that would be a good trade for somebody who thinks there's a lot of inflation. But I don't know of a brokerage company that's going to let you do that. They're not going to let you take the money you get by shorting a stock and buy gold with it. They're going to, as I said, they're going to force you to leave it in U.S. dollars. And so that I don't think is what you want to do. Now, if you think the stock market's going to go down, if you think the dollar is going to remain stable, if you really believe in deflation, in that the U.S. dollar is going to gain purchasing power, then, yeah, shorting stocks would be a very lucrative strategy if you're right,
Gotcha. All right. Thanks a lot, Peter.
Sure. And, of course, other ways that, professionals tend to approach this is they short some stocks and they buy other stocks, and they may have a neutral weighting to the overall market, but at least if the stocks that you're short go down more than the stocks that you're long, or if all stocks go up, yet the stocks that you're short don't go up as much as the stocks that you're long, you can make money that way. And that could be a good strategy with a lot of inflation if you're long the stocks that on a relative basis will do better in an inflationary environment than the stocks that you have shorted. Anyway, again, we've got open lines, 855-4-SCHIFF if you want to call the show, 855-4-SCHIFF. I will go to Danny, who's calling from, is that Calgary, Canada as well, Danny?
Yeah, I'm in Calgary, but I'm actually an American. There's no work there. I have to move up to Calgary.
That's why you moved up there, looking for a job?
Yeah, well, there was no work. There was no work in the States, so big oil.
What kind of job did you? Oh, so you're working in the oil industry?
Yeah, I work in the oil industry. Actually, not too far from the Newport office, and there was wasn't much work, so I had the opportunity to move to Calgary and.
Did you look at North Dakota up there in the Bakken, or?
That's not specific to my field. I'm in the refining.
Oh, okay.
Yeah.
All right.
But still, great pay up here. Anyone looking for a job can move over here easily. Fine. But anyway, my question is about cars. If you have higher interest rates in the future, won't car prices go down? And then then how do you factor inflation with that? I mean, where do you see car prices in the future?
Well, I think the price of cars is actually going to go up because of inflation. But in real terms, yes, car prices will come down. If people can't easily borrow money to buy cars, then the price of cars would go down. And yes, but unfortunately, we're going to have a lot of inflation. But if you strip all that out, if it was harder to get a car loan, which would be the case if we had sounder money and if banks could only lend out their savings, not what the Fed created, then it would be much more difficult for Americans to buy cars on credit, which would mean that in order to sell cars, the prices would have to come down. And I think what would happen is if you couldn't get car loans as easily as you can, most Americans would buy used cars rather than new cars. I mean, because obviously a new car, there's a cost associated with making a new car. Although what might happen is car manufacturers, knowing that Americans couldn't borrow money to buy cars, would produce cars that had a lower cost. So they wouldn't be as fancy. They might not come with as many options, you know. But because people are able to borrow all this money, we end up spending more on cars than we otherwise would spend. And I think that's unfortunate. I don't think anybody should borrow money to buy a car unless, of course, the car is being used for business, right? But even in that case, it doesn't justify buying an expensive new car when a used car could get you back and forth to work just as easily as a new car. Now, if it's a question of reliability, maybe a brand new car could be a little bit more reliable, but then you buy an economy car. I don't see why it makes any sense for someone to borrow money to buy a BMW or a Mercedes. If you're buying a BMW or Mercedes, you should have the money to do it. You should pay cash. If you don't have cash, find a car you can afford to buy without a loan and buy that one. But unfortunately, that's not how it is. We all buy these expensive cars and we leverage up. And that money is money that can't be used to fund economic growth because instead it was used to buy a car. Anyway, we'll be back. I don't know if you have a follow-up to that question. We'll be right back here on SchiffRadio.com. Don't go away.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff. We are back here at SchiffRadio.com. Hey, we got an open board, 855-4-SCHIFF, for people to call in to the program. We don't have any guests, remember, today. This is Open Line Friday. Just your calls. We've still got better than an hour to go here on the Peter Schiff Show, so 855-4-SCHIFF. You know, before I move forward, I want to talk a little bit more about the last call, although Danny has dropped out, this whole idea about car loans and how that affects the market. You know, a lot of the Keynesians are going to say, no, we need these car loans. It's good for the economy. People can borrow money. They can go out and buy cars. That drives the economy, all that spending and buying of cars. And then they buy new cars and, you know, whatever. Then they need other things for their new cars. And this all nonsense. If we didn't have car loans, people could still buy cars. They just would buy a lot less expensive cars. So where would that money go if it wasn't going into cars? I mean, it would go somewhere. A lot of that borrowed money, a lot of the money that is being loaned to Americans to buy cars would instead be loaned to businesses to make things, to produce stuff so that we didn't have to import as much and we could create more jobs. We would create more jobs if we didn't have all these car loans. The car loans aren't creating jobs. I would argue that they're distorting jobs. Now, in a free market, yeah, if somebody wants to borrow money to buy a car, I'm not saying the government should make it illegal, but I do think that making a car loan is inherently riskier than making a business loan that is backed up by better collateral. After all, a car loses value. It's not the greatest collateral because, of course, it depreciates rapidly and it doesn't throw off any income. So I think if you didn't have all the government involvement, and of course government is very much involved in auto finance, subsidizing it and making loans more affordable. And of course, with the Federal Reserve keeping interest rates so low, that makes more people willing to borrow money to buy cars. I think in a free market, credit would be much harder to come by for car loans. And that would be a good thing because the credit would go to where it's economically better off. And I think individuals, too, it's a stupid financial decision to borrow money to buy a car. It really is. It makes a lot more sense to buy a less expensive car and then save your money, invest it, and then when you can afford an expensive car, that's when you buy one. I think it's much more prudent. But for people who think that you need these car loans to have economic growth, China's economy is growing much faster than ours, right? The economic growth rate is around 9%. They have an automobile market now that's bigger than ours, yet 90% of the people buying cars in China are paying cash. only 15% of the people in America buying cars are paying cash. So the fact that there's not a lot of car loans in China, that hasn't stopped the Chinese economy from growing. That hasn't stopped the Chinese automobile market from growing. In fact, one of the reasons I think that the market is so much healthier and is going to grow so much more is because it's real. Because the Chinese are buying cars they can afford. Americans are buying cars they can't afford. Anyway, before I grab these phone calls, I want to talk a little bit or play a little sound from an interview or congressional testimony yesterday. Department of Energy Secretary was testifying, and he was asked if he would apologize for Solyndra. And if there was ever something that somebody in Washington should apologize for, it's flushing $500 million of taxpayer money down a toilet on Solyndra. I mean, we lost a lot of money. You at least think we can get an apology out of somebody. Not the Department of Energy Secretary Stephen Chu. Listen to how he defends that decision here in cut number 2.
Based on what you know and what's happened, who is to apologize for the $500 million that has been out the door?
Well, it is
DOE?
It is extremely unfortunate of what has happened to Solyndra. But if you go back and look at the time decisions being made, was there incompetence? Was there any influence of a political nature? And I would have to say no.
I'd have to say yes. That's not the end of the cut, though. I think. Oh, I guess I didn't realize it was split into two. But yeah, of course. He says, was there incompetence? Of course there was incompetence. I mean, it was complete incompetence. Was there undue influence? You betcha. That's why the loans were made. But anyway, I guess we have this split into two cuts. So here, play cut number 3.
So no apology?
Well, it is extremely unfortunate that what has happened to Solyndra, and I think you and I both feel the same. But when the bottom of a market falls out and the price of solar decreases by 70% in 2.5 years, that was totally unexpected, not only by us, but if you look at the range of predictions that were being made by financial analysts from the last quarter of 2008, 2009, the average, there were some outliers, but the average of those were not expecting these prices to plummet.
Well, that's not true. The market was not very favorable to solar. That's why the company needed a bailout. The company was going to fail. What he's trying to say is nobody could have known this, that everybody was expecting that the solar market would be very strong. That's nonsense. If that was the case, they would have needed a bailout. The fact of the matter is maybe Washington bureaucrats couldn't figure it out, but the free market had it pegged. That's why they couldn't get any money in the free market, because people who had good sense, that had their own money, didn't want to risk it. They didn't want to roll the dice on solar. It was the government that was going to roll the dice, because it was the taxpayer that was going to be stuck with a bill if they crapped out. That's what happened. And try to say that nobody could have predicted this, that's a complete lie. Everybody predicted it. That's why the company was failing. If a lot of people were as sanguine or as optimistic as Obama was on solar, they would have been swimming in money. They wouldn't have needed federal bailouts or federal guarantees. They would have found a bunch of suckers in the private sector who were willing to risk their money. The fact of the matter is they wouldn't, because they had the outlook. And you know what? This is just proof. This is why we don't want the government picking winners and losers, because they don't know what the hell they're doing. That's the problem. Yes, they were probably surprised by the fact that solar prices collapsed. That's why we don't want them making investments. I mean, they're going to be surprised by everything. They have no idea what's going to happen in the market. That's why they're working in Washington. If they had any idea, they'd be on Wall Street making a lot of money. But that's not where they are. Anyway, we'll be back. We're going to take more calls and continue this here on SchiffRadio.com when Hour 2 continues after this short break.
The Peter Schiff Show.
You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
And we are back. This is Peter Schiff. Hour 2 of the Peter Schiff Show is underway. We are taking calls. 855-4-SCHIFF is the number to call as the second hour of Open Line Friday kicks in. You know, before we finished up on the first hour, we're talking about the Secretary of Energy saying, hey, he doesn't owe anybody apology for the Solyndra losses. After all, there was no way to possibly know that the solar prices were going to collapse and that the solar industry wasn't economically viable. Well, number one, that's a reason that they shouldn't be investing taxpayer money because they have no idea what they're doing. Obviously, bureaucrats don't know what's going to happen in the market. They don't know what technologies are going to win out, what technologies are going to lose out. They don't know what the public wants. If they did, they'd be out there creating businesses. The fact that they don't is one of the reasons that they're working in Washington. And because they do, they should keep our money out of their investment ideas. You know, I wonder how many people in the Obama administration bought stock in Solyndra. How many people invested their own money in Solyndra? Probably nobody. But yeah, they didn't care about investing our money because after all, if they got it wrong, hey, they didn't have it wasn't their butts on the line. It wasn't their skin that was in the game. It was ours. You know, it's interesting too that a lot of times when our leaders in Congress want to invest their own money, it's only because they've got insider information, right? They want to put their money on a sure thing, but they're gonna put our money on a crapshoot. Especially when the dice are loaded in the other direction or the other favor. But anyway, Joe Leno made a similar observation on his late night show the other night. We've got a little sound here, cut number 6.
And on the Democratic side, Nancy Pelosi denouncing a 60 Minutes story accusing her and other members of Congress of insider trading, in which they all got huge returns and made a ton of money. We have one of those members of Congress only invest their own money when it's a sure thing. But when something like that solar company, Solyndra, I'm not paying. Use the taxpayer money. I'm not going to go for that. They take a chance with their dough. Exactly. Yeah, exactly.
Yeah, why not get us in on some of the good trades? Instead, we get stuck with all of the losers. Actually, Leno also went on to make a point about congressional millionaires. Here, cut number 7.
Well, listen to this. A new study. A study has found 47% of Congress are millionaires. The median net worth of Congress is $890,000. Median means half are worth more and half are worth less. How many think they're all worthless? Yeah, I gotta go with.
See, but what I'd like to see the study of is how many people come into Congress poor and leave as millionaires. I think a lot of people make their millions in Congress. I've got nothing against somebody who makes his millions in the private sector wanting to give back and wanting to spend some time in Congress. I think what happens is a lot of people make their millions based on their connections in Congress, or they do what Newt Gingrich did. They make millions based on their connections with Congress after they leave Congress. I mean, why do you think Newt Gingrich was paid so much money, $1.6 or $1.8 million in total from Freddie Mac? It was because of his connections in Congress, in particular to the Republican Party. Right, the Republicans were starting to bring down some heat on Freddie Mac for good reason, and so in order to deflect that heat, they bring in a heavy hitter like Newt Gingrich, they put him on the payroll, and they buy his influence. So he leaves Congress, and he cashes in by peddling his influence to help keep Freddie and Fannie in business and keep the housing bubble inflating. And then, of course, the guy's got the nerve to say that Chris Dodd should be in jail and Barney Frank should be in jail They should be, but they should be sharing a cell with Newt Gingrich if you're going to be consistent. Because the one thing that bothers me the most about politicians is hypocrisy, right? Lying is one thing, but being a hypocrite, that brings it to a whole new level. Anyway, let me go back to the phones. Next up, who we got here is Jeff calling from London. Jeff, welcome to the show.
Thanks, Peter. Big fan. We actually have our own solar shenanigans going on here in Ontario, rather than.
Oh, you're in London, Canada?
Yep.
I didn't even realize. So I guess there's a lot of Londons around.
Yeah. It's about.
I was going to say you didn't sound English. Anyway, go ahead.
It's about 2 hours from Toronto. I was actually up in Toronto when you came to give your speech. Anyway, a quick comment and then a question regarding the solar. We have our own program here with the Liberal government. What they do is they pay individuals 80 cents per kilowatt hour, which is about 10 times the going rate to put up solar panels, and then they wonder why the cost of electricity rises. So these contracts are for 20 years, and it's really going to cause some problems down the road, much like Solyndra. The question I had was relating to using long-term options versus buying an underlying stock. So say on Barrick Gold, you can buy 100 shares for $5,000, but if you for that same $5,000, you can control about 400 shares of the stock using January 2014 options. Just wondering what your input on that strategy would be. Thanks.
Yeah, well, a lot of it depends on the timing. Obviously, if there's a huge move up in the price of Barrick Gold and there's going to be a lot of inflation, you can control a lot more shares using options than you can if you just buy the shares outright. So the question becomes, what's going to happen if the stock doesn't make the move that you're anticipating prior to expiration? If you're buying options that are out of the money, then you're going to lose all of your premium, all of your investment if the stock doesn't go up. Now, you can buy stocks. You can buy a stock that's in the money, in which case you wouldn't lose 100%. You would just lose whatever the premium happened to be. If Barrick is at $50 and you buy, a $30 call, well, obviously, it's going to have to really move down before you get completely wiped out. But you can control more stock. But obviously, if you buy a $55 or a $60 call, you can control a lot more stock because you can buy a lot more options because there's no intrinsic value at all. It's pure premium. But, you introduced an extra layer of risk in that you need to make this move before the expiration of these options, or you can end up losing quite a bit more money. And, in fact, a lot of people have done that. If you would have gone back a few years ago and had the same strategy and said, look, gold's going to go way up. I don't want to buy Barrick Gold at $50. I'm going to buy the $60 calls that expire. Let's say they were expiring this month, and you bought them a couple of years ago. You'd have lost a lot of money. I mean, Barrick Gold, even back in this December of 2009, was about $50. I think it hasn't really gone. It's the same price it was, 3 years ago, even though the price of gold during that period of time has gone up from about, where was it back then? It was definitely under 1,000 at that time, and now, so it's gone up 70%, more than 70%. So, now is that going to happen again? Is Barrick going to still be at $50 3 years from now? Is the price, while the price of gold is up at $2,500? I don't think so. I mean, I'd be very surprised, but hey, it's not impossible. And if you got money bet on it, I mean, you got something to lose. But anyway, I don't know if I answered your question or not. I can't get too specific because I can't give any investment advice on the show. But remember, options are always speculative, and don't buy them unless you're prepared to lose that premium. Anyway, we'll be back. We've got more to go here on the Peter Schiff Show on SchiffRadio.com. Stick around.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com. We are taking your calls here at 855-4SCHIFF, 855-4SCHIFF. Guess Danny dropped off. He had the question on options. Yeah, just remember, there are ways to use options to reduce risk, and there are a lot of ways. Most people use options, and they assume a lot of risk. Yes, they assume a lot of risk in the anticipation or the hope that they might make a lot of money. And while it's possible to do that, you can get rich with options, but you can also get poor with options. So that's why if you're going to play them at all, you got to make sure, just like you're walking into a casino, don't walk in with any money that you're not fully comfortable with losing. And if you control the downside, then, yeah, if you speculate correctly, you can make money. And I do think that there is going to be a lot of ways to make money speculating over the next few years, if I'm right, on the collapse of the dollar, because that is going to influence the dollar price of a whole lot of objects. And I think things are going to cost, prices for certain things are going to be much, much higher than what a lot of people expect. And that is and that is an environment where, people can make a lot of money if they do it right. But anyway, proceed with caution. And if you do it, hey, I'm not giving any advice here. But do speak to a professional. Talk to a broker who can help educate you and, alert you to some of the risks that you may not appreciate. Anyway, let me go back to the phones. Brian is calling locally here from Stamford, Connecticut. Brian, welcome to the Peter Schiff Show.
Hey, Peter, first-time caller, long-time listener. Thanks for taking my call.
Hey, thanks for calling.
Okay, so I just wanted to run a hypothetical by you. If an Austrian like Ron Paul were to get into office, don't you think the media would villainize him and they would attack him saying, look, he's doing nothing when these austerity measures is really what we need, but explaining that to the public is impossible,
Well, I think he would do a lot more than nothing. I think vetoing a lot of stuff would be doing something, and I think forcing government to cut spending would be doing a lot. So I don't know that they could accuse him of doing nothing. I think he would actually be doing a lot, but it won't be things that the media will like. So I agree with you that they will vilify him. It's interesting. I just noticed that they had a mock primary, and I guess it was a elementary school or high school. I'm not really sure how old the kids were, but they did it in New Hampshire. I think they had about 250 students who participated in the poll, and the winner was Ron Paul. So Ron Paul has got support even among grade school or junior high school kids who were voting for the congressman. So that's good news.
Great. All right, thanks for taking my call, Peter.
Now, they can't vote, but maybe their parents can, and maybe either the parents have influenced the kids, and the kids support Ron Paul because their parents do, or maybe the kids have just decided that they like Ron Paul, and maybe they'll be able to help influence their parents to vote for Ron. But, I think this thing is heating up. I've been saying all along since I started on this show that the media was writing Ron Paul off, that he didn't have a chance, and I've always said, look, he's got a chance. I'm not saying he's a shoo-in to win, but it's certainly not impossible that he could win. And, in fact, look at the way he's polling now in key states like Iowa and New Hampshire. I mean, he is right up there with the top people, despite the complete lack of media coverage that he has relative to his opponents. So that means his message is real. It's resonating on its own, and it's growing. And, of course, the bigger his constituency is, the easier it is to grow. And I'll tell you one thing. Once you go Ron Paul, you don't go back. I think his support is pretty rock solid. I think people who are going for Herman Cain or going for Gingrich or going for Romney or going for, I don't know if anybody's still left, going for Perry, but I think these guys are lukewarm. I mean, the wind blows a little bit in the direction. They're going to dump their candidate, So Ron Paul doesn't have – when he's got his supporters, he's got them. The other guys have got to worry about losing theirs. They barely have a grip on their voters. So if they gain a few, they might lose a few. Whereas Ron Paul, he's got his supporters. All he's going to do is add to it, right? You're not going to be smart enough to support Ron Paul and then, just have a mental lapse and then pick one of these other clowns. I guess, I mean, the only other person that makes sense supporting is Gary Johnson, but unfortunately, it doesn't really make sense to vote for him at this point because he's not going to get anywhere. You know, I mean, he got no media coverage. At least Ron Paul got some. But the governor got none, which is unfortunate because of all the governors in the race, he was certainly the most qualified out there. But, you know, he still has 1 or 2% of the vote, I think, 2 or 3% of the vote. And so we'll see what happens. Hopefully, maybe before the end of the race, he might throw his support behind Ron Paul and not necessarily waste any of those votes. It could be the difference between a victory and defeat in some of these early primaries. If it's that close, we need all the votes that we can get for the Libertarian candidate. And if we have one strong horse in the race, that's what we need to back. Even for those who might think that Gary Johnson would make a better candidate than Ron Paul, and that you could certainly, you know, I could see an argument. You could make an argument for it. Whether I would make it or not is another story. But certainly there are people who are supporting Gary Johnson who can make an argument that they think he's a stronger candidate to beat Barack Obama. But if there's no chance of him winning, but there is a chance of Ron Paul winning, then even if you happen to think Gary Johnson would be the better nominee, you got to vote Ron Paul anyway because he's the only likely guy that we can put up against Obama, who shares that libertarian, limited government, pro-constitution, pro-freedom ideology that Gary Johnson has. Anyway, let me go back to the phones. Jack from New Orleans, Louisiana. Jack, welcome to the show.
Yes, thank you, Peter. You know, I've been reading lately a political opponent of ours, George Soros, who's been nevertheless been a very good investor, and it's got me, you know, psyched out about, you know, booms and busts in the gold bubble, and you know, his theory of reflexivity, and you know, I'm nervous about gold has got to first at some point, and knowing when it's going to be and getting out in time, you know, is concerning to me. And how do you figure that? I mean, how do you?
Well, that concerns a lot of people. That's why a lot of people don't own gold, because they figure it's just a bubble that's going to burst. I know George Soros supposedly has already sold his gold, and it's higher now than it was when Soros sold it. Now, of course, if gold really is a bubble, then Soros, maybe he's correct. Just because you know, a bubble continues to get bigger after you recognize it doesn't mean that you're wrong. But I happen to think he is wrong, because I don't think gold is a bubble. And I'm not worried about the bottom dropping out of the gold market. I'm worried about the bottom dropping out of the dollar market. You know, and maybe not just the dollar, but the euro, or, you know, the yen, or any one of a number of fiat currencies. I think that what we would have to do politically in this country to cause a significant decline in the price of gold is something that nobody is willing to do. And even if we end up going back on a gold standard, which would be the right thing to do, we're not going to do it with gold at the current exchange rate. Gold's going to have to be a lot higher. So one way or another, I'm convinced gold's going up, but I'm glad that George Soros sold his, because I don't want him owning gold when it goes up. I just assume see George Soros go broke. Anyway, we got another half hour coming up here on the Peter Schiff Show. Stick around. We're taking more calls. 855-4-SCHIFF. We will be right back.
The Peter Schiff Show.
Got those babies, a flow that's crazy. Mr. Magnanimous, James Samuel and Cannabis. Place your hippocampus.
We now return to the Peter Schiff Show.
Call in now, 855-4-SCHIFF.
That's 855-472-4433.
Rebel Radio.
The Peter Schiff Show.
This is Peter Schiff here at schiffradio.com. We are taking your calls on this open line Friday. So far, it's been a relatively lackluster, I guess, day in the market. You know, the Dow is up about 40 points. That's really been pretty much for the entire show. The gold market's a little bit stronger. Gold's up about $8. I'm looking at the ETF, GLD, and silver, based on its ETF, SLV, up about 50 cents. Not really much action in the gold stocks. Gold mining stocks pretty much flat on the day. The dollar is lower today, although it's off its lows from earlier this morning. I'd say the dollar has cut its early morning losses in half, but the euro currency is trading now at about 134.5. It was trading over 135 when I woke up this morning, so we have seen a little bit of weakness come back into the euro, even though it is stronger on the day. Bond prices also down, but not considerably. Looking at the yields, though, the yield on the 10-year pretty much bang on 2%, and the yield on the 30-year bang on 3%, and there is a spread of just 100 basis points, 1%, between the 10-year and the 30-year bond. Again, these are low spreads and very low absolute rates. The question is, when are these rates going to spike up? Because when they do, look out below. In fact, if you look at the 30-year rate, 30-year rates in this country, even over the last 10 years, the highest they got was about 5.8% in August of 2002. So for over a decade, we have had a 30-year government bond rate below 6%. That's pretty low. I mean, if you look at where rates were in the 90s and the 80s and the 70s, they were much higher than that. And I think they're going to go a lot higher than that again. The problem is the country is now so indebted that it can't afford it. So if you believe that the U.S. economy is going to continue in its present form, you have to believe that interest rates on the 30-year bond are never going to get anywhere near even that 6% in our lifetimes. And I think that is a very foolish assumption to make. Look at how quickly interest rates rose in Ireland, in Greece. Look how quickly they started to move up in Italy, now moving up in France. Higher interest rates are coming. They're coming to countries all around the world. They're not going to skip the United States, right? We're going to get it in spades. It's just a question of when. And when it does, the bigger they are, the harder they fall. And we're the biggest debtor of all, and we will fall harder than just about anybody else. And there is nobody that can catch us. Anyway, back on the phones, next up is Jeremy calling from Fort Lauderdale. I'm going to be down in Florida next week for the Thanksgiving holiday. I'm also going to be doing a small appearance down there, be speaking at one event while I am in South Florida. Anyway, Jeremy, welcome to the show.
Is it open to the public?
I think it's open to the public that live in the community in which I'm speaking. I don't know that it's open to everybody. I'm not sure how big the clubhouse is, but they're promoting it down there. But it is at the place where my mother happens to live. But it's pretty big. She's down in Boca, and down there they have a lot of country clubs. And so they have a clubhouse, and they have a lot of members. So I'm going to be doing an event for the members there. We'll see how it goes.
Very nice. I had a brief comment about Warren Mosler, your guest yesterday, and I missed the first hour. So I missed the first hour, so I apologize if you talked about this at all. But I used to debate a lot of these MMTers online, and I basically just stopped doing it because I got sick and tired of it. I think that him and his followers really have an identity crisis. And I think they're incredibly disingenuous because when you really get down to it, what they're saying is that they're kind of resigning to the fact that this is a system that we have, and they're just trying to figure out how can we manage the system the best way. And in that regard, they're really no better than the Keynesians. And in fact, they're really just trying to be like the next evolution of Keynesianism, trying to say that Warren Mosler can better govern the economy than the invisible hand of the free market. And I really feel like that's where he differs from people like you and myself and other Austrians, in that we're not resigned to the fact that this is what we got. We're trying to say that what we got is a sham.
Well, I think his approach is very much Keynesian in nature, in that he is trying to stimulate the economy with spending, and that's what it's all about, just spending money, even if you have to create it into existence. That's what his philosophy. He thinks if we just have more money to spend, even if the spending results in higher prices, that somehow it's a good thing,
What he's saying is that there's an optimal level between taxation and inflation, and that he thinks he can find it. But that's just as ludicrous as Ben Bernanke saying that I can control inflation through,
Yeah. I mean, I think the optimal level of taxation is equal to what you're spending, right? So number one, I don't think government should run deficits because why borrow money if you can afford to, if you have a tax base, why borrow the money? Just level taxes. Now, I can see if you're saying, look, we're building an infrastructure project that, is going to, pay benefits over 20 or 30 years, so let's borrow it. But you know what? Why? So we're saying we're going to build a bridge, and because our children are going to benefit for it, let's make our children pay for it. How about, why can't we leave our children a bridge without a mortgage? Is it such a terrible use of our wealth to build a bridge or a highway and leave it to our children without a mortgage on it? I mean, so what? Would it kill us? Meanwhile, it's not that expensive. But but I would say if we're gonna have that kind of financing, then let the states and the localities do it, and let them finance it with a revenue bond or definitely a toll road or something like that, where you can earn back the investment from the people who are currently utilizing the road or the bridge. But the other optimal level of taxation is as little as possible. And so, but that means you have to have government spending as low as possible to have your taxes as low as possible. But anytime you finance government spending with a deficit, you're simply increasing the cost of that spending, because now you have to pay not only for the money you spent, but for the interest on the money you borrowed. So it always increases the cost if you have to borrow to pay for it.
Absolutely. And, yeah, I mean, I couldn't agree more, and I just wanted to point out, I mean, he's obviously a brilliant guy, and I don't want to take that away from him, but, I mean, he's really nothing more than a Keynesian, and he's trying to kind of...
No, he's a very smart guy. I think he's too smart. He's outsmarted himself. He's so smart, it's like he's gone full circle. He's so smart that he became dumb.
Yep, absolutely.
But, he's got too many statistics and too many facts that he's thinking about. And he's lost track of the simplistic part of it. And sometimes you can outthink yourself. Sometimes the simplest solution is the best solution. And if something makes sense on an intuitive basis, yet you can somehow come up with some crazy formula where it doesn't make sense, trust your intuitions. Don't trust those formulas. That's how people got into trouble with a lot of these models into subprime mortgages. They put a lot of bad data into a computer, and they trusted the conclusions. And all they had to do was open their eyes and realize that this is impossible. How these condos can't be worth this much. I don't care what this computer model says, and there's no way these people are going to pay it back. It doesn't matter what this model says.
Yeah,
why would people pay back these loans? Yeah. Anyway, it was an interesting discussion, and I know this guy is pretty popular among the person who I think it is that's responsible for all these, these little anti-Peter Schiff YouTube sites out there. This guy is their messiah. They worship this guy. They think, because I'm the antithesis of him in that I want sound money. I think debt's bad, and he thinks debt's okay, and we need more cheap money.
Yeah.
But he's not responsible for any of those sites himself. But I think the person who is a follower of Mosler. But Mosler's got nothing to do with it, as far as I can tell.
Well, we're all waiting for you to call him out. You keep saying you know who it is. So.
Well, I don't. I think I know who it is. I mean, I just don't like to give that guy any more publicity. If I knew for sure, he'd already have a lawsuit on his hands. The fact that I don't know who it is. I don't know who to sue, so I can't. I don't know who to serve. Now, if he wanted to step up and admit who he was because he thinks what he's saying is legitimate, then let him step up and defend himself in court. But he don't. He won't. He knows it's slander. He knows it's libel, and that's why he puts it all under an assumed name and hides behind YouTube.
Yeah.
All right. And anyway, next up, who is it? It's Chris calling from Salt Lake City. Chris, welcome to the Peter Schiff Show.
Hey, morning. It's a little early out here. I have a question for you. I actually own a small business. Basically, I sell commercial images, and I've been doing it in the North America and Europe for several years, and that's how I make my full-time income. And I just moved into the Asian market a couple years ago, and I'm now at a point in India where my company there that distributes and represents me is they're taking like 30% because I'm not not an Indian resident. And anyway, they just opened up a bunch of new agreements in like Japan and South Korea, and I'm looking at the long-term potential here. And this business has the potential to make a lot of money in the Asian market, like way more than what's made in the U.S. And I know people personally that have made six-figure incomes off of this, after doing it for a few years in the U.S. back in the day. And I'm like, well, eventually at some point, I'm gonna, there's a possibility that I could have to really deal with a lot of government meddling and money and things like that. Because right now I just get paid through, like PayPal transfers is pretty much how a lot of these agencies decide to do their transactions. Sometimes you can do bank wiring. But anyways, this taxation thing just popped up recently, and I'm like, well, what can I do to get like a foreign account or open up a foreign, maybe open like a, foreign incorporation and run my business from over there? Because I know that don't you have like a foreign company?
Well, Mosler himself was on yesterday talking about the tax breaks that he enjoys. He has moved his business. He's working out of the Virgin Islands, where he says that 90% of his income is excluded from federal tax because he's got his income which is being generated out of the Virgin Islands. So you can look into that. There are a lot of ways that you could work offshore. But the thing is, if you have offshore businesses, you can't be the one that's working. The work has to be performed offshore in order for you not to have to pay taxes here in the United States. So just because you incorporate or form a business in another country, if you're the person that's actually working and generating the income, doesn't matter where you live, the IRS still wants you to pay taxes, even if you're living abroad and doing the work. The way you can postpone the taxes is if you own a business but do none of the work yourself. If it's all being done out of the country, then if it's a corporation, the income isn't taxable to you until you take a dividend or if you happen to pay yourself a salary. Anyway, I don't know if you have any more questions on that, but you can hang on over the break. We will be back. We got one more segment coming up here on the Peter Schiff Show, so stick around. You're listening to SchiffRadio.com.
The Peter Schiff Show.
To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America.
We're sorry. Peter Schiff is back on the air.
And we are back. This is Peter Schiff here at SchiffRadio.com, winding down the last segment of this open line Friday. We've got, I think, 3 more calls on hold. I'll try to get to everybody, but probably no time for any other callers. Next up is Chris calling from Salt Lake City, Utah. Or Chris, actually, was still on the line. Chris.
Hey, I just had one other question about the foreign bank accounts. The other thing I was looking at, because I was doing some research on that, and I was just curious: is it even possible these days for somebody like myself who's younger to even get a foreign bank account? And is there any benefit to it anymore?
Well, the benefits are, not as great as they once were. But yes, I mean, the benefits to the extent that if the U.S. government starts seizing illegally assets, they're far less likely to be able to seize it if it's offshore and they can't get at it. But the U.S. government is really extending its reach and bullying a lot of foreign banks into cooperating with it. But it's also going to be a lot more difficult for you as an American to get a foreign bank account because of the laws that we are now trying to apply to foreign banks, particularly those that have some presence here in the United States. There's just no way they're going to take your business. So the only way you're going to find a bank that will accept you as a customer is if that bank has absolutely no business connections whatsoever to the United States. And even then, they probably won't want you. As I said, I opened up my foreign bank, Euro Pacific Bank, in St. Vincent's and the Grenadines, and we will not accept any American customers, period. I mean, I just, even though that bank has no direct businesses here in the United States, I own it. So I don't want to step afoul of the IRS or any of these entities here. I don't want anybody accusing me of money laundering or helping people to avoid taxes or evade taxes, whatever it is. So I don't want to become subject to record-keeping requirements. I don't want to have my foreign customers worried about what the U.S. government might do to undermine my bank. So basically, I just don't take any American customers, and I let all my other customers know, hey, this bank is solid, your privacy is protected, you don't have to worry about U.S. government authorities rummaging around at this bank because they have no right to go there. Because by refusing to accept any American citizens, there is no way the U.S. can claim any jurisdiction over what's happening at that bank. I mean, the only thing I have to do is, as an American, I need to report the financial bottom line. I got to let the U.S. government know what the profits and losses are of the bank. But that's it. They have no right to know who the customers are, what they're doing with their money, because all that is private. And since there's no Americans there, they've got no business. And I think the things that they require, and so many, the requirements now on these institutions, what they have to do with record keeping and withholding, they're just not going to want to do it. In fact, a lot of American citizens who are living abroad now are having problems because they can't open bank accounts. If they're a dual citizen and they're living anywhere in the world in a major country, they can't do any business. They got to keep all their money here in the United States. They can't have local accounts.
Man, that's crazy. Where would you recommend that I go get more information? Because I asked a banker information. He didn't really know much about it. Where can I go to research foreign bank accounts, foreign,
Well, I just, you can research it on the internet. I mean, obviously, all that stuff, all these foreign banks have websites. I mean, so you could go online and, pretty much research anything these days. So that's where I would start. Anyway, thanks for the call. Next up is Bob calling from Virginia Beach. Bob, welcome to the Peter Schiff Show.
Thank you, Peter, for taking my call. I'm a big fan of yours, been read your books, been following you for the last several years. I'm amazed on how well your crystal ball is to see this economy rolling along like it is, and seeing the things that are happening, that the things you wrote in your book 3-4 years ago are now coming true. And my question to you is, when do you think this thing's going to start unraveling at an accelerated rate? And my house is going on the market on Monday, just to prepare and get out of debt to what's coming. And I'd just like to know what year or what quarter, if you could, predict this calamity coming.
Well, I think it's happening soon. I couldn't say with any real degree of certainty whether it's 2012 or 2013, but, I don't think it's 2020. I think it happens a lot sooner than that. But again, there's a good chance that the collapse happens and it's the savers that are wiped out. I mean, it's not necessarily that you need to get out of debt. You only need to get out of debt if we end up having a deflation in the sense that prices collapse and the dollar gains value, or you need to get out of debt if you have adjustable rate debt, like a floating rate mortgage, and we could have a big increase in rates, and then we have deflation, which crushes the value of your home. So if what we end up having is massive inflation and the dollar collapses, then you wouldn't want to prepare for that by eliminating your debt. You'd want to have the debt and let inflation eliminate it. But you just have to make sure you have the right kind of debt, financed the right way, and you have to do the right thing with the money that you've borrowed. But, so again, and nobody knows for sure, the form that this collapse is going to take, whether it's better to go into the collapse as a debtor or to go in as a creditor. Personally, I think it's a debtor. I think the creditors are going to get killed. Now, it's the debtors that should be killed. But the politicians are going to help the debtors. And as I said, the creditors are going to lose either way. If we have a massive deflationary collapse, the creditors aren't going to get paid. Or they're going to get paid, a fraction on the dollar. They're going to take a huge haircut. If we have massive inflation, the creditors get paid, but they get paid in money that has very little value. That's the dilemma that they have. That's why, I have my portfolio position the way I've done. Anyway, hey, we've come to the end of the segment. I think we had another caller. Unfortunately, we couldn't get to him. I will be back again next week. Don't forget to watch me over the weekend on on the Huckabee Show on Fox News. That should be airing on Saturday, on Sunday. And I'll be back again here on the Peter Schiff Show. And I know I haven't done a video blog lately. It's my intention to do one later today or Saturday. So look for a new video blog at the Schiff Report. Anyway, that's it. Have a great weekend, everybody. We'll be back again on Monday for another episode of the Peter Schiff Show, the gold standard in talk radio. Bye for now.